our friend Steve Leisman, and he's, he has different ways of gauging things, and maybe through some tea leaves thinks that it's possible the Fed could be thinking about a pause in the rate cuts. You're saying that they're finally doing the right thing, and I assume that you mean that they're going to continue cutting. Do you think that there's a possibility the Fed could be considering a pause because of seeing strength, and would that be a negative in your view for the economy and for the markets?
Well, I look at the money market indicators and I look at the yield curve indicators. So here's the good news. The yield curve at the, let's see, 10s versus bills, 10s versus 2s, has now finally moved back into a normal position. So it's right size. Long rates are now above short rates. Not by a lot, but by some. That's a good sign. I think money market futures, Fed fund futures, correct me if I'm wrong, they're all predicting another 25 basis points at the Fed meeting, or reduction at the Fed meeting.
That's correct.
I concur with that. I think that's wise. Jim Bullard of the St. Louis Fed, I think, who won 50 at the last meeting, I'm sure he will be pushing for 25, maybe 50 again this time. And they're moving in the right direction. Their balance sheet is starting to expand a little bit. I don't want to get into a lot of Fed bashing. They do the best they can. Their models are highly flawed. The deep state board staff, of course, has not been helpful. Oops, did I say that? But the fact is, the Fed is moving us in the right direction. So, yeah, we're going to see some lower rates. And by the way, that's a global phenomenon, Joe, right? Lower rates all across the world, maybe saving the rest of the world from a recession.